Hello, investors. It's Don Vandenbord, Senior Portfolio Manager with Revere Asset Management. Today is not Wednesday, 9/6. Today is Thursday, 9/7. And I am coming to you from St. Augustine Beach, Florida, with tonight's Revere Daily Market Insight video. State of the market, we're in an uptrend. This uptrend under a little bit of pressure as the market continues to pull back. The uptrend started on August 29th with the O'Neill follow-through day. Check the trend gauge over here. Market leaders still acting fine, and not just my 2121 list. Everybody in the shop maintains one, and we're not really seeing. Let's just say we're seeing more leaders acting fine than we are seeing uh, weakness in leaders. It's not 100%, but 80 to 85% holding up fine, so we can't ignore that. Short-term trend, all five of the major indexes. So we've got the NASDAQ 100 undercut but reclaimed the 21 today. S&P closed right on the 21 yesterday, first close below today. Dow, mid and small caps, multiple closes below the 21. We'll see how the week ends before we update the arrow here. Medium term, same situation. S&P actually with two closes now below the 50-day, joining the Dow, mid caps and small caps. NASDAQ 100 undercut but reclaimed by the close. All five of the major indexes above their long-term 200-day moving average. Remember, the market does not get into serious trouble until the S&P 500 has a weekly close below the 200-day moving average. That increased the chance of a bear market because all bear markets occur beneath that level. Typically from the high, when you come off the high until you break the 200-day moving average, is about 11 to 12%, and not as much on this pullback because we never got back to the highs. Nonetheless, we are seeing some pressure in the uptrend. Not ideal, let's just say that. So what happened today? We gapped down. Main reason for the gap down, twofold. Overnight, China again kicked up the rhetoric, banning uh, Apple's iPhone from government agencies. And then we got some economic data that was not as bad as predicted before the open. And we got some wage inflation data that was worse than expected. So that combined to send the futures down further. But the overnight lows held. We didn't make any further progress down, and we steadily chopped higher all day. Didn't get off of red except for the Dow, and leaders acted fine. Mid and small caps didn't. They fared the worst. But it could have been worse, but it was a day three down, gap down, just the same way you don't chase a day three gap up higher. You don't chase or short a day three gap down, but it does put a line in the sand, and that's what we'll be discussing in tonight's video. Here are the final numbers. Our 8 ETF composite down 0.8%, underperformance there. Dow gap down 0.75. Got as close as down 0.2, little minor fade over the last couple of minutes into the close. Closed down 0.32%. NASDAQ 100 gap down 1.3%. Apple put in a low immediately. Tesla 2, Nvidia 2. They didn't get red, but they closed well off their lows. In fact, Tesla turned green during the afternoon session, but again, not a good number, but well off the lows. Dow positive by 0.2, mid caps down 0.9, Russell 2000 down 1%. Global 60/40 stock bond down 0.11%. Bond prices bounced, meaning bond yields came off a little bit. In-house GROTECTION down 0.26%, primarily hit by our Nvidia position. We'll talk about the one position that we added today when we get to the tail of the tape, and we'll look at a few other charts. Let's dive right into it. Here's the S&P. So here's the follow-through day. We've had 3 days of follow-up strength, not outstanding strength at all, but it was strong. It was also a low volume week, with it being the last week of quote unquote summer for you Yankees anyway. Kids go back to school after Labor Day. I'm a former Yankee, so I'm allowed to say that. Uh, then we had a gap down on Tuesday. Well, not a gap down, a close down. It wasn't anything significant. It was a mild pullback. In fact, the Nasdaq closed positive, but small caps took a big hit. And leaders didn't have a great day, and it was because yields were ticking up again. Yesterday, a little bit harsher, closed right on the 21 on the S&P, broke the 50-day. Today, the gap down, but let's take a look at the 5-minute chart. We're going to quickly compare the 5-minute chart. You can see how different they are across the different indexes. So here's your gap down, two tests after the open to try to push it lower, and we couldn't. Then we started chopping higher, and then really like a 3.5-hour base into the close with only a 12-point range. So that's tight action. So this tells us that with the gap down, we couldn't go any lower as of right now. Yields were not weighing on the index today, but a stronger dollar was. But we did come off the opening lows. So if you're looking for a silver lining, that's what it is. I'm going to go through the 5 indexes very quickly on the 5-minute. You can see how different the action was. NASDAQ 100, even a worse gap down, but again, chopped its way higher off of it. Still not a good close, down 0.7%, but much better than the gap down result. Dow, let's go to DIA here. Really a tight range, uh, kind of just chopping around the where we a little higher than where we opened. We sold off a little bit, tried to make higher highs and couldn't do it. So just basically a sideways day on the Dow. A big difference here in mid caps and small caps. You can see the gap down here, but the gap down continued lower, and we couldn't even get back into the open range on mid caps. So continued underperformance on mid caps. Very similar on small caps. Gap down. Couldn't get back into this opening 30-minute range. Not good action there. We're going to go to the daily and go backwards here. So 3 days down now on small caps puts us right above the 200-day moving average, firmly below the 50-day moving average, and below the declining 21. Not good stuff there. Let's go to mid caps. Kind of the same situation. 3 days down, still above the 200-day moving average, but by only 1.3%. 3 days down, firmly below the 50-day moving average. Let's go to the Dow. Let's go to the index instead of the ETF. Here's the Dow under both declining moving averages, still 2% above the 200-day moving average. And then the Qs on the daily chart undercut but reclaimed the 21 by the end of the day. Actually closed right on the 50-day moving average, less than a tenth of a percent below it. So rounding basically right on it. Today's lows need to hold for the S&P and the Nasdaq. And let's take a look at Apple very quickly because it was in focus today. Gap down, but 171.96 the prior low, 173.54 today's low. So we didn't breach that, but that makes those two levels pretty critical for Apple. And as this goes, I would imagine the S&P and the Nasdaq are going to go also because of the big weightings that they have. Although remember, the weightings are not as big as they were because of the reweighting that went on a couple weeks back. Here's Microsoft, not really looking that bad, holding the 8 and the 21. The declining 50-day moving average is acting like some resistance here. This is not accurate after hours. I don't know why that's showing 319. I'm showing it bid 329, almost 330. So that's Microsoft. NVIDIA. Let's just go through these pretty quickly while I'm on it. NVIDIA lagged today, but came back, bounced right at the 50-day moving average. Tesla gap down, but finished positive. So still undercut, but reclaimed the 21. Still trapped, pinched between the 50-day moving average and the 21-day moving average. Google, pretty good performer today. One of the best looking ones. Note this kind of sideways base here. It bounced off the top of it. Hasn't even touched the 21. Looking pretty good. Meta had a weird intraday shakeout after a strong morning. I couldn't really explain this. I didn't see any news on it, but look at this. Nice morning. Big move down. Recovered some of it to close basically flat, but that's a very strange looking candle, and it's tight right around the 21, the 8, and the 50-day moving average. All right, we got a little bit out of order, but let's go to the VIX now. VIX again above the 21, but failed into the close, closing near the lows or at the lows of the day, staying below this declining 21-day moving average. Also, the second day it tried to pop above 15. Remember, below 15 is where we have been having the most success in the indexes. So the VIX, by the end of the day, fear in the morning, not as bad by the close. Let's flip to the dollar. This continues to be a problem. Look at this trend on the dollar. I think I read that this is going to be, we're on track to be up for 8 straight weeks for the first time in like 8 years. So this test of the 21-day moving average just served as a springboard for higher highs on the dollar, now up 5 days in a row. No coincidence that that coincides with weakness in the overall market. And let's go with the precious metal check. Basically flat today was GLD, GDX, down 0.7%. That's been down for 6 straight days now since running into the declining 50-day moving average. And silver, that big gap up 2 weeks ago is just a distant memory now, as it's been completely filled and down 6 days in a row. Bitcoin, up 1% on the day, continues to be basing tightly. Let's flip to bonds now. Bond yields got a little bit of a reprieve as after 3 days down on bond prices, we got a little bit of a bounce. This is the broad bond index. TLT is the long bond. A little bit of a bounce there. TYX, this is the 30-year yield. Basically inside day today and almost an inside day yesterday. So this is consolidating for a move one way or the other. I noticed this when I was looking at our TBT chart today, really to kind of almost double inside. This needs to resolve one way or the other, whichever way it goes. I would expect the market to go opposite. And the 10-year TNX down 0.70 today. That's our inter-asset correlation and index and Big Seven summary. Let's go to the tail of the tape now. Yesterday, I said we closed below the 21 yesterday, but it wasn't. Today was really the first close on the S&P, but below the 21. So we will update our bull or bear case tomorrow, depending on how the markets fare. There's the news. China bans iPhones at government agencies. Jobless claims were below expectations, but labor costs were above expectations. There are a lot of unions threatening to strike in various industries across the country. That is going to drive up labor costs. The UAW and GM and Ford are extremely far apart. Day count from down 2 to down 3. Second close below the 80 MA. First close below the 21 EMA. Value sectors outperformed today. And on the downside, tech, semiconductors, and regional banks just can't get out of their own way. Only change to the portfolio was to buy a starter in Fastly. This is another 21 over 21 name, adjusted beta at 1.4. Bottom line for the day, gap down, but the low holds. We chopped higher, but closed red. Mid and small cap lagged, but the leaders are okay, or in some cases, in a lot of cases, even better than okay. And we'll see what tomorrow brings. Let's go through the charts of the holdings, and a couple that just continue to act well that are in the 21 over 21 list. Let's look at ELF here. Leaders lead, and they're doing that. 3-day consolidation and ELF, a bounce off the 8 EMA today. That looks good. Celsius, the energy drink of champions, just continues to grind higher above the 8 EMA after its earnings gap up. Let's go through what we bought today, Fastly. And we bought it using the same formula as yesterday, an undercut and reclaim of the 8 EMA, coinciding with a 60-minute cross on the stochastic from oversold. It just gives us a low risk entry, doesn't guarantee anything, but it surely worked for the VRT buy. The 2 VRT buys that we did yesterday, same situation, oversold, cross up below the 80 MA and follow through strength today on above average volume. Um, VRT, certainly a market leader, one we're happy to be in. We're not in all the ones that we wish we were in, but bit of a challenging market over the last couple of weeks as we base. Speaking of basing, here's Uber. Nice base here. Undercut reclaim the 50. We bought it. 3-day pullback below average volume, bounce at the 21 and the 50-day and the 8 EMA. You're seeing several charts of leaders with this 3 moving average stack here. If it breaks, obviously bad news, but often that serves as a launching pad after a consolidation for higher prices. And if we get them, we get them. We'll add to it. If we don't, our stops will get hit. We're not at the mercy of the markets from meaning we're going to just sit and take a Mike Tyson hook to the chin. We're going to be active and do something about it. I showed the TBT consolidation. NRGU continues to be fine, consolidating after the gap up 2 days ago. And one more look at NVIDIA. Bounce at the 50-day today, and Tesla also gap down, but turned green intraday. Undercut reclaimed the 21, that's acting as support, but the 50 is acting as resistance, and it's pinching very tightly. Another leader acting pretty well, CrowdStrike, after its earnings gap up, making higher highs. That's a good looking chart right there. And that's going to wrap it. We'll do a full 21-21 review tomorrow. Remember, it's not how much you make in the markets, it's how much of that you can keep. We are not pressing our longs until we get some better feedback and clarification on what's going on with the indexes. But for now, the indexes continue to consolidate. One thing I didn't like today is that 44.58 level here acted as resistance. This is the 48. This is where we broke out of on the follow-through day. We didn't undercut the low of the follow-through day, but we tried to get back above that 44.58 and failed a couple times today. So that's a pretty clear level. So bears want to see a break below today's low. Bulls want to see a break above that 44.58 and today's highs and get back above those moving averages that are overhead and stacked in a tight manner. As always, we'd like your feedback. Emails don@revereasset.com or my partner Dan Stewart, dan@revereasset.com. The phone is 855-REAL-WEALTH. That's 855-732-5932. And with that, I will wrap up today's video for Thursday, September 7th. This is Don Vandenbord with Revere Asset, telling it like it is. Thanks for listening and have a great day.